just round up what we've been seeing in global markets as well. I just want to quickly pull up what the US 10-year did because of all of that positive data that we talked about. So good cues over there, a bit of slide in the US 10-year, 4.24% was the rate last. And, you know, that overview, of course, continues. Crude has also benefited because of this, because a good global economy, a good US economy means increased demand, increased crude prices, hence, so 82.42 on the Brent, but boost overall overnight on crude. Asia open mixed. Japanese inflation data came in largely in line. And that was seen as a positive. So you have the Nikkei about 0.5% up. Shanghai is down. And India looks like it'll open in the green. As per the implied open, you might see a positive start at least. Nothing crazy or exciting for Friday, but positive in the sense. Fund flows. You have FIIs who have been consistently selling, and that trend continued yesterday as well, 2,605 crores, while DIs bought 2,432 crores yesterday. So I think more caution coming in perhaps today as well. How do you guys see the trade setup?
Just very quickly on Japan, Tamanna, Niraj. Markets in Japan have declined over the last 6 days. So this is the first morning. Of course, you've got decent inflation data that's come in. That's actually helped Japanese markets stall that fall. So I think more than caution, I think it seems like things may be getting better, right? It's been 2 days that were rough, but the sun is out for those markets at least.
For those markets at least, definitely.
Yeah, well, from an India trade setup perspective, a pullback day yesterday. And if you just look at the intraday move of the Nifty yesterday, it shows what a strong pullback it was. I don't think too many people penciled in at the start of the trading day that we'll probably end flat considering what Asia was doing. But it still becomes very, very difficult to call for some material upsides in the current scenario. In fact, a call on the index has largely been fraught with danger because on either side, it is being met with either selling or buying as the case may be. The thing is the data and what it is showing. If you just look at for the new series, what FIIs are doing, FIIs on both the index and the stock futures side have reduced their longs. So that is one key data. On the index futures, they have actually piled on the shorts as well. On stock futures, they've reduced the shorts as well. So clearly on the index, there is a reduction in longs, building up of shorts from the FIs for the current series. That is one key thing to watch out for. Other thing is valuations. And frankly, we just look at how AI stocks are behaving, how NASDAQ is correcting. It shows you the fragility. No, this is a wrong line, but just look at the NASDAQ and it shows you the fragility of betting on extreme valuations. The other piece is what's happening to copper and other metals as well. So copper prices, the pullback is now over 13 days long, and therefore that might continue to impact the sentiment on metals. Not that metal stocks are doing very well, but keep in mind that metals look a bit skittish because of what the Chinese markets are also doing and the pullback thereof. There's a beautiful greed and fear note from Chris Wood today, which speaks about this, but also just the behavior of base metals and copper in particular. So watch out for Nifty metal, watch out for copper related stocks particularly, and watch out for the base metal itself. If you trade on the MCX or NCDX on the metal names, on the metals themselves.
Yeah, and I think, you know, something that stood out for me, while most people are arguing that the markets are expensive, we may be at the start of a correction of Indian equity markets, just look at the numbers, right? You've got the NASDAQ that's down 8% from its highs. It's up 16% year to date. South Korea is down 5% from its highs, down 2%, up 2% year to date. Japan is down 11% from record highs, and it's up 15% year to date. India is down only 2%, and 1.5% has literally come in the last 5 days, despite so many big events. You've had elections, you've had budget, and despite all that and all that noise around our markets being very expensive, we're only off 2% from highs. So while Niraj maintained that the rebound yesterday was impressive, the fact remains we've seen that strength even on budget day. At some point, the markets were down 300 odd points, but by the time we went back and closed markets, we went home flat. Similar sort of setup happened on Thursday, Friday. Wednesday and Thursday, what stands out is that despite very negative cues from the rest of the world yesterday, the Nifty actually only opened with a gap down of 150 points, which was 0.7% off, probably the best performing market across world markets yesterday. So I think there is, while It's tough to call it a top. It's also a difficult market to trade because there is fear, and I think that's what's most noteworthy. Well, but it's about stocks, it's about earnings. This morning is a lot about announcements as well that have come in. Mankind Pharma, and this is the big story that we're tracking this morning. We'll, of course, spend more time on this on Editor's Cut. But Mankind Pharma has announced that they're looking to acquire 100% stake in Bharat Serum from Advent International. Remember, just before the pandemic, the Advent International had bought out Bharat Serum from the Daftari family. This was a significant deal just before the pandemic happened. And of course, the deal that happened at, I think, 2,000 to 3,000 crores. Finally, in 5 years, Advent has made about 13,000 crores as it sells it to Mankind Pharma. Analysts believe this may be a little bit of an expensive deal for Mankind Pharma, as it will be looking to raise a significant amount of debt to actually fund this deal. But the fact that their portfolio and distribution is fairly large, the belief is that they will make good this deal over the next 2 to 3 years. But it turns EPS accretive only next year is what you want to be mindful of. So the stock was up 2%. It'd be good to see how the markets perceive this deal, which on the face of it looks expensive, but will do good over the next 2 to 3 years for Mankind Pharma. Well, the other one in terms of earnings is Adani Energy. It had a pretty strong day of trade yesterday, actually. Just before the markets closed, I think Adani Energy had a strong showing in trade. Earnings were actually good as well, so it was up about 1.5%, and as you can see, it pretty much closed, took off just a little bit at closing, but managed to do okay. Revenues were up 47%, EBITDA was up 43%, and margins were largely flat, 1.2% lower to come in at 41.7%. They have reported a loss of 1,190 crores versus a profit of 180 crores, but there's a huge chunk of an exceptional item. If you remove that exceptional item, their profits are up 73%. Now, what is that exceptional item, you will ask? Adani Electricity, which is a subsidiary of the company, is in the process to divest the Hanu Terminal Power Plant to honor its ESG commitment. Remember, the transaction price approved is at 850 crores, but the carrying value in the books of Adani Energy stands at 2,321 crores. So the difference of 1,500 crores is what is hitting the profitability of Adani Energy on its books, and hence you are seeing an impact in terms of a loss. But operationally, it's a clear beat, 70% higher in terms of profits for the quarter. Tech Mahindra reported numbers. It's been largely a mixed bag for tech players, but this one was largely in line with street expectations. No fireworks. Revenues were flat. EBITDA was 16%. Profits were up 28.7%. So largely in line with what the street was expecting. There was a one-time impact last quarter of 308 crores, and hence you're seeing a significantly large net profit item, which now, of course, doesn't exist, and hence that uptick. Considering that EBITDA was at 4.5% in the fourth quarter of 24. American vertical grew quite well, but other geographies have actually fallen. They've said that the broad-based performance is being witnessed for Tech Mahindra, except in communication. BFS demand remains stable, and there is an improvement in the US. They also believe that they are seeing some green shoots, and new opportunities are showing up in existing accounts and in new logos. So all in all, I think Tech Mahindra largely in line with street expectations. No major beat. America has done well. BFSI is stable, and there are some sort of new conversations happening there too.
Yeah, just a couple of things on TechM. Their subcontracting costs have gone down this quarter, and that's also boosted revenues a fair bit. I was also interested to see this quarter's numbers because remember, Mohit Joshi had laid out his entire plan in Q4. And just the fact that he had this clear plan had seen the stock run up. So Q1, in that sense, is testimony to the fact of whether we are moving in that direction or not. So just going by what Mohit Joshi himself is saying, that we are improving, but we're not there yet. So it is a beat on estimates. That one-time impact, Samina, you're talking about is absolutely correct. It's about 308 crores last quarter. And I just want to add what Nuvama is saying on it very, very quickly. And this one line, I think, sums it up. Nuvama says, small steps in right direction, but miles to go. I think that's how you would see it. They've set a target price of 1,200 rupees versus 1,000 earlier, but that's still a downside from where TechM is right now. And they say that you can continue to anticipate near-term pain before any long-term gain. But I reckon you would see maybe an upside on the stock because that 29% net profit Q on Q increase figure looks good, even if the there is an
Deceiving
exceptional,
as it is.
exceptional item. And I think the street has been a bit kind to tech companies overall. Just a bit of positive light at the end of the tunnel and jumps. But we'll wait and see. AU Small Finance Bank, I thought was also one you could watch for. Net profit is up 30%. NIIs also look very, very good at 54%. GNPA, your gross NPA numbers have inched up a bit, so that's a bit of a pain point. So has your net NPA. So AU Small Finance Bank, you could see at a time when entire bank space is hurting a bit. United Breweries has decent numbers, but I think the street expected a little more. You've seen this entire pack do well yesterday because of the Andhra statement. The Andhra Pradesh government is going to tweak its liquor policies. Remember, new government has taken over under Chandrababu Naidu, and they're going to allow a lot of other pan-India brands to come in. So that's why you've seen that 4.5% nearly upswing towards the end of trade yesterday in UBL. But their numbers are not half bad. Revenue up about 11%, EBITDA up 28%. Margins are decent from 9.8 to 11.5%. And profits have also gone up about 27.5%. So the net sales growth has looked good. Volume growth, despite capacity constraints, has been good. And remember, this was an election quarter. So it has to be seen in that line. I reckon you might see a good move on UBL as well. So, yeah.
Well, yeah, that's interesting. And liquor yesterday had a really strong move, as Tamanna said. Would be interesting to see if there's more in store. Okay, 2 or 3 stocks on my radar. SJVN is the first one, and it'll be impossible for this stock not to have a bump up. It's received an LOI from the government of Mizoram for a pumped storage project. Now, the point is, for any company, an order of a size of 14,000 crores is huge. For SJVN, it is, I don't know if there's a term which is superlative to huge, but it's just so big for SJVN. So we expect this stock, which was down yesterday, to see a bump up for sure. It'll be lovely to hear from the management at some point of time in the day about what the execution timeline and what it could mean for the numbers. But watch out for SJVN. Very, very strong performance expected today. KPI Green, not quite an SJVN in terms of the order win size, but they have gotten an LOI for a 620 megawatt grid-connected renewable project. Now remember, these grid-connected renewable projects have now become a bit of a norm in the last 3 or 4 odd months. A few companies started winning this in Maharashtra, and then now that's spreading to other states as well. KPI Green winning this in Gujarat. Circa 3,500 crores worth of an order win, I presume. Would have an O&M contract attached to it, the details of which I don't have, but very likely that this should spur some excitement in the stock of KPI Green today. So you should watch out for this one. And something that will take a bit of a slam dunk is Cyient. Now, I'm standing on the toes of a brokerage note from Nuvama to lay out why Cyient could hurt today. Nuvama has a sell, of course, or a reduce, or whatever the terminology is. The target price is 1840, but look at what Cyient has done in the quarter. The expectation was of a 2.5 or a 3% decline. They have come out with the DET revenues, which is segmental revenues, DET, down 5% quarter on quarter. EBIT margins cracked 250 basis points quarter on quarter to 13.5, significantly lower than what was estimated. Now, as a result of all of this, the numbers have looked wobbly. They have gone ahead and said that for the year, instead of a high teen growth, which they had guided to earlier, or high single digit growth, not high teen, sorry, high single digit growth, they'll do flattish YOY growth. But Nuvama says that even for this, they have to do a 3% constant quarterly growth rate, which is going to be extremely difficult for Cyient. And therefore, there are question marks on even the flattish revenue growth. But the point being, viewers, in this expensive market, nobody wants a company with no upside and limited downside. I mean, yes, the lower valuations are limited downside, but you want to buy a stock because there are limited upsides. You want to buy a stock which is high growth because the valuations are stretched for the market at large. Suffice to say, Cyient could see a bit of a slam dunk in the session today.
Just to add another one that may not have it good is Ramco Cement. Earnings were extremely disappointing. Of course, analysts had gone into the earnings season of Ramco Cement with very pessimistic expectations, but just to take you through those numbers, the stock itself is also down 8% this month. Revenues were down nearly 7%. EBITDA is taken a cut of 7%. Margins were the only thing that were flat, and net profit is down nearly 51% on Ramco Cements. Revenues are declining primarily due to weaker cement prices because of increase in intense competition and higher regional concentration. Brokerages also believe that Ramco Cement has lost significant market share in some of its key markets. So prices are a problem, realization is an issue. This is, a weak quarter because of elections. But so all in all, it's not turned out well. Couple of downgrades as well that have come in on Ramco Cement post its earnings. One good one actually, and I think we should quickly highlight that, is Motilal. Stellar set of numbers there. They've just managed to do well once again, and I think this whole industry is doing exceptionally well in terms of growth. Revenues were up 54%, profits are up 68%. Remember, this is a big private wealth brokerage. Brokerage, of course, being one vertical, but private wealth also is a good space, and some of their products have actually done quite well in the business. So at a consolidated level, another good quarter for...
I believe this is their highest ever on
quarter on quarter, it seems to be record-breaking.
Yeah. So it's yeah. So Motilal Oswal is going to have a good morning. Just quickly want to talk about DLF. Because real estate has been in focus, and people are still trying to figure out whether these new real estate indexation removal norms and the taxes is a positive or not for the sector. Companies have been reacting, the stocks have been reacting positively, because the idea is that if you now have to pay less capital gains tax when you sell, at least from what you buy here on, it becomes, all things considered, a relatively more attractive investment and brings it at least closer on par with other investment opportunities. Having said that, DLF Q1, remember this was the quarter when they had those record bookings for their Privana property in Gurgaon, where within minutes they had, or within hours they had full bookings, etc. So that second phase was launched, that recorded 5,600 crore bookings. Potential sales guidance has also been increased quite robustly from 36,000 crores to 42,000 crores. Having said that, their revenues are down, their EBITDA is down, their EBITDA margin has squeezed quite significantly. Net profits are up though, but the way the street has been looking at real estate numbers or their quarterly results has been with a bit of rose-tinted glasses, looking at what they are going to earn in the future. So I'm not quite sure if DLF will have a bad day, but yeah, the EBITDA margin squeeze could be a bit of a negative. Just Chalet Hotels very quickly as well. Chalet Hotels numbers actually are not half bad, but their profits are down significantly from 89 crores to 61 crores this quarter. Their margins though have gone up by about 352 bips. And again, Chalet in the pre-budget couple of sessions had a very good run up. So one to watch. Jupiter Wagons, I know your rail stocks are out of vogue right now. But this is also a seasonally poor quarter. Usually H2 bumps up more for these kind of stocks and for this space. But their EBITDA margin has gone up a fair bit from 12.85% to 15.53%, and net profit up 46.2%. So all in all, Jupiter Wagons would be considered in the category of a good set of numbers this morning.
Yep. And just before we wrap up very quickly, just watch out for Sobha, likely a block deal at a 6% discount, and only 5% of the 9.9% equity held. So Sobha could see a downtick and may stay lower today because the street will fear further supply. And Indus Tower is going to consider a share buyback on July 30th. That could be very, very interesting.